Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, August 24th with our pre-market morning strategy session. Today we're going to be reviewing the SPXP, the SPX structure, taking a look at the tick, and then looking at the overall charts before the market open here, and get a overview of our trading view script levels, and if we have time we'll take a look at a couple stocks that we posted yesterday that were call dominated with our delta charts, which is a great tool we have here at GammaEdge that allowed us to be able to anticipate some stocks that were going to be moving pre-market.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
We'll go ahead and jump right into it with the SPXP. All expiries turned on, as you can see by the purple tiles over here. Again, all expiries turned on. We're still in a put-dominated environment, even though we did have a shift yesterday, intraday, early on to a call-dominated environment on 0DTE, and also further out for multiple expiries. Our web app allows us to look at those expiries on out individually or aggregate, to really get a quick view of the overall landscape if it's shifting intraday or anticipating a shift, or actually watching it real time as we saw yesterday early on in the trading day. As you can see here, we have transition very well defined, 44.15 up to 44.35, which is close to where spot price closed yesterday. Again, put dominated above and below spot price, but we have seen a extreme erosion of the puts above and below spot price compared to yesterday, exposing these calls that are speculative above us, that would be out of the money, and then also these calls below us that are supportive in any price that pulls back down. 4,400 will be an extremely important level to look for demand coming into today if we see any weakness. And then below 4,400, we'd probably be looking down to 43.75 to 43.80 for supportive demand type action due to this call structure still below us. These are in the money calls. If we start to see these erosion of calls below us, exposing more of the puts, out of the money puts below us, then that will provide more weakness. We'll be able to seal that structure changing. But as of now, we have call speculators, at least on this time frame, and all expiries above us, which is changing to a little bit more bullish stance. 0DTE, we discussed this last night on our open mic sessions with our members. Very narrow transition heading in today. This will give us a nice opportunity for if this, then this possibilities. We have in the money calls below us, as you can see by the green net delta. This will be supportive. Unless these begin to close and expire, these will have supportive type flows for most of the day. Again, 4,400 is that purple shaded strike that would be important on the downside to hold. And then we have these puts above us. We start to drop off pretty significantly above 44.70, 44.80, and those negative net deltas come in. So moving above that level today would most likely be our cap to the upside. We probably see some stalling around 44.60 with these negative net deltas coming in there. Unless we watch the vol-u-vol-d command intraday, as we did yesterday, we saw a significant growth of the 44.30s and 44.40 strikes right out of the gate, roughly 15 minutes after the open. So that gave our members and everyone in the trading room an opportunity to look for the upside for the day. +1 DTE adding on for expiry for the rest of the week. That includes today and tomorrow. Again, call dominated. We opened up the transition slightly. We were right at the top of the transition level. So could be a possibility of failure, as we're going to be opening right close to the P-trans level. If you are familiar with any of our levels, P-trans, above P-trans is where all the strikes will be turning positive and supportive. So we like to see price get above those transition levels and hold. And then we'd like to see these erosion of these puts above us. These in the money puts above us would like to erode, exposing the calls, allowing us to move higher. Again, 44.75 to 44.80 would probably be the cap. We have 4,500 up there for all expiries, and expiry into Friday, that would be an important level to get to. And then most likely that would be the ultimate stalling level up top, as we've shaded that with the highest OI. But moving up through these negative net deltas might be a little bit of a slow trudge into Friday, even though those are expiries. Decent amount of expiry, total OI 800,000 into Friday. So we definitely could see some sort of continued move up. as these in-the-money calls below us continue to be supportive with the flows. Again, down to 4,400, and then 4,380 below that, as we discussed, would be demand levels that I would be looking for price to stall and consolidate, and then possibly move back to the upside. Here is without this week's expiry. Moving on, again, SPXP, total structure. Again, we're put dominated. Make sure you keep that in mind. The 40,000 foot view is still put dominated, even though we've had a short-term sentiment change for the week and into the end of the month. Again, puts below us and then calls above us. So 4,400 again becomes an important level, and then 4,500 to the upside, significant important level there, and 4,475 as we've already discussed. We have seen erosion of these puts below us, exposing these in the money calls, which again is supportive type action, and what we want to see if price is going to advance higher and start moving up towards the 4,500 level. Here's a SPX combo, all expiries turned on, again put dominated. Make sure we understand that, but we are seeing this exposure of in the money and out of the money calls above and below spot price. That exposure of the 4,400 calls was extremely important development from yesterday. Again, these will provide supportive demand type action on any pullback. Unless these become closed and we start to see more puts fill in this red to green. But this is what we like to see if we're going to have a sustained move back to the upside. We need to see most of these puts start eroding away, as we saw 2 weeks ago when we were completely call dominated above and below spot price. Very narrow transition here, which is wide and loose. So we would like the structure to get a little bit more organized and formal. With in the money calls below us and out of the money calls above us to have a significant move back to the upside. Here's the landscape view. We've noticed as I spoke about yesterday, the call speculators are still alive and well up top. So this still leaned us to the bullish possibility case, as I discussed yesterday, and then it played out for a short term yesterday. Again, negative GEX, negative trends below us. These will be important levels on the downside as we pull back, and we've that these puts have filled in this liquidity that was absent just a few weeks ago. Again, short-term speculators taking opportunity on any pullbacks in the market to take profits on those puts or be active in a short-term move to the downside. So again, we'll continue to watch this call speculation to the upside. We'd like to see that plus GEX grow as it was a couple weeks ago. That would mean call speculators are coming out in force again, anticipating price to move back to the upside. Here's our GEX ratio we discussed about on open mic. If you're not familiar with this, make sure you ask questions. We have lots of back testing about it. We reached an extreme level on GEX ratio that we were discussing on Sunday. We got down to 0.5 less, or I think it was 0.6 or somewhere around there, 0.6 something. Again, opportunistic for a possible relief bounce play to the upside, and we've seen that so far. Now we're almost back to parity, which is a balance of calls and puts, as you can view versus our wing charts, and we'll see how this continues to play out. Do we go ahead and start moving back to the upside and this GEX ratio continues to rise, or do we get back to parity and we start seeing some balancing on the calls and puts? So we'll see how that plays out for the rest of this week and into the end of the month. Here's our new web app. If you're not familiar with it, interactive, allows members and users to really look ahead and get a jump on the calls or on the SPX structure, understanding what is happening. Again, for today, call dominated above and below spot price. This is what we saw yesterday, 15 minutes after the open with our early run. One of the great tools that we have here is being able to select single expiries or add-on expiries to look where we might change to put dominated. So if I do just single expiries, roughly out to 831, we're still call dominated. We'll go ahead and show you that. So click on 831, then we head to put domination. 830 is still call dominated, but if you add the aggregate on, then we would be call dominated all the way up until the end of the month. So then we may start seeing some shift after the end of the month into the beginning of September. And then remember, we have a larger September expiry coming up, so we'll see how that plays out. So anyway, anticipation is that we could be slightly bullish to up towards the end of the month, and then possibly with some more weakness beginning the end of the month, and then heading into OPEX. We'll see how the positioning is. So again, if you're not familiar with the web app, make sure you're understanding how to use it, how to anticipate where price may be moving, and looking at the structure for zero DTE if you're an intraday trader, or also swing trading if you're 1 to 3 to 5 to 7 days also. We'll take a quick look at the tick. We did have a trigger day yesterday. Overall market model is still down and off with red below cyan. but the instantaneous CT did provide us a trigger very early in the day, roughly 10:45 to 10:50. So that allows you to get on. Again, prone to failure, so we need to manage risk to make sure we understand that we don't want to get out of our skis because we're under the colored ribbon, but the CT needs to start moving into the colored ribbon and living above the colored ribbon if we want to see the slope of this continue to change back to the upside, and possibility market model turning back on, which would be red crossing above cyan. We'll look at the tick US. We did have a narrow new lows outpacing new highs, and narrower than what it has been, so that is constructive. Our filter tick, institutional tick, was living above 0, so that was also constructive, and our CT, obviously, you can see here and also shown here, was living above the 0 line, and we did have a trigger early on in the day for us to get long, so that was great and played out very well towards the end of the day for all our members. Again, red below cyan, so the overall market writing structure is still off, so make sure you're managing risk appropriately and not getting out of your skis. So heading in this morning, we did have a gap up. Now we're pulling back. Again, important level is 4,400 to the downside. We'll be watching that. Again, the transition level there that we pointed out, 4,410, 0 GEX, will be right around this level depending on if we pull back. COTMP will be 4,425. So we'll watch how these levels play out this morning. Obviously, we had NVIDIA earnings last night, which were pretty significant. It's gapping up quite a bit, so we'll see how the Qs in Microsoft and AMD play today. Tesla yesterday was one that we identified pre-market. Again, we were looking for our tools yesterday pre-market. If we did have a change, we were anticipating a possible sentiment change in the market. I was looking for the Delta call, in the money and out of the money call dominated stocks. Tesla was one of those that we identified very early on. Core playbook trade for us would be 0 GEX to P-Trans. We didn't complete that totally. We did actually complete that totally yesterday on the trading view run, but now the P-Trans has shifted up to 240-250 of our overnight run. So again, these are the stocks that we try to identify early on in the day or the night before. We have automated Discord bots that run for us that populate all this data. So you can look at those at your leisure in the morning or overnight, depending on when you have free time, and identifying these stocks early on gives us the anticipation that these would be the first stocks that, if the market starts to change trend, would be the first stocks that would start moving back to the upside. All right, hopefully that helps. Everybody have a great trading day. If anybody needs anything, make sure you tag @admin or post in hashtag questions. We'll be in the Discord in a few minutes. Thanks, everybody.